Welcome to Rein It In. Man, have we got a lot of ground to cover. We're talking port strikes. You may not even know about those because many don't. Of course, we got to hit on the U.S. election. Trump is the new president. Employment and unemployment. We got to take a closer look at the numbers because what they're giving us is deceiving. As you probably know, Alberta continues to lead the way. But what does the future for real estate look like in Alberta and, of course, across the country? Affordability or unaffordability? We got to take a closer look, break it down. Stay tuned. We got a great show in line.
Ladies and gentlemen, welcome to episode number 52. You're in for a treat. Patrick, let's rock and roll.
Let's do it. Just a reminder, do us a favor, like, subscribe, comment. Let's keep this channel going.
All right, Patrick, where do we want to start today's show? Do we want to talk about the election? I'm dying to talk about it. Or do we want to talk about the port strikes, which seems nobody knows about? I mean, I didn't even know about it. You had to tell me.
It's interesting, isn't it? Well, we can talk politics. And by the way, I think the port strikes are a little bit of politics. You know, why isn't mainstream media talking about it? It's a big deal. But let's kick off with the U.S. election because Trump, our new president. What's your thoughts, JG?
Well, it's fascinating. You know, it's been such a show to watch this unfold south of the border. And you know what I find fascinating? I guess I'm going to start with the reaction to him becoming the president again for the second time. By the way, this is only the second time ever this has happened, right, Patrick? Where someone was the president, didn't get reelected, 4 years later, then got reelected. This has only ever happened twice. And I think the last time it happened, it was like in the 1800s, like 1880s or something like that. I forget the gentleman's name, but pretty fascinating. This has only ever happened twice in U.S. history. And people's reactions have been quite interesting, and I found it to be very, very polarizing, as is not really surprising. But some are just losing their noodles over this. And then you've seen by the reaction in the markets, by the reaction in Bitcoin, by the reaction in much of many sectors, people are really, really excited by it. And what I am really glad that it happened is it was a sweeping victory. There was no debate here. It was very clear what people wanted, and I think that that's great.
Well, you know, there's what they're calling a market melt up. Of course, all assets are rising, going harder because Trump is in there. But let's be clear on something. You know, whether you're a fan of Trump and who he is and how he is, you know, regardless of that. Now, I've been following Trump for a number of years, but as importantly, what he did was he surrounded himself with what I'm calling an A team. I mean, everything from J.D. Vance to Tulsi to Vivek. I mean, gosh, he's got a dream team. Add to that Elon Musk. What you've got is a number of what I'm going to refer to as very successful, compassionate capitalists who have run multi-billion-dollar businesses, understand the cost of bureaucracy, understand the cost of politics. I think we're going from that extreme left thought process somewhere hopefully back to what I would consider center. And JG, you like me, we're both capitalists. We're a little bit libertarian, but ultimately we're very compassionate. It's not that we don't want social programs. It's not that we don't think that people need to get looked after. There's certainly sectors that do, but it's time. We got to get back to some kind of normalcy and really, like it or not, the U.S. president is a big deal. You can actually kind of say he's really the president in some respects of the world because what he does affects multi-countries, and Canada, of course, as our biggest trading partner, really affects us. And I'll just end with this little concern. Trudeau, Freeland, incompetent at every level. They've been trash-talking Trump for 4 years, certainly the past year, around their narrative and their script to trash talk Polyev. They're so freaking stupid. I can't even believe it. It makes me nuts. So they've trash talked them, and now they got to sit across the negotiating table from them. You know, the good news is Trump loves Canada. Musk loves Canada. They just don't love Trump, and that's going to cost us. So that's all to say.
They don't love Trudeau, you mean?
Or sorry, they don't love Trudeau. So the next year is going to be, unless there's an early election, we're in for some pain. And that's really my kind of broad overview of what's going on.
Well, that's interesting. Let's dive into that. Let's actually double click on that, Patrick, which is, I think with regards to that, hopefully you're right. We'll have an election in a year. Hopefully we have an early election. But if we don't, I think Trump's got a lot to do at home before he focuses his efforts. And I think he's got a lot of bigger fish to fry than anything that's Canada related. I don't see a whole lot of changes right away on the Canadian side, but over the course of 4 years, there will be, which is why we definitely need some new representation and some stronger leadership on our side. There's no doubt about that. Now, what do you think about, assuming Polyev gets in, let's hope. How do you think that? How do you think that's going to go with Trump? Do you think there's going to be some good cooperation there?
Well, he's already stated that he's a fan of Trump. He has actually made some comments. And I think it's going to happen quicker than we think. There's a fundamental that we've become really complacent, or I want to say used to. We've normalized the fact that government usually takes so long to do everything, the multiple layers of bureaucracy. He's made it very clear. Now let's go back. You've got Vivek and Elon Musk, JD Vance, but let's just talk about Vivek and Musk. These are guys that move fast. I mean, imagine when Musk walked into Twitter and lays off 80% of his staff, the bureaucracy of his staff, like literally within what? A week. So they're already moving fast. I mean, you start to see the announcement they're making, and he isn't even in as president yet. And so I think that we're going to be on the card way sooner, and that's going to look, because of steel, because of cars. It's going to affect us in a lot of ways with our trade. Now, there's going to be some limitations to what he can do, but our tariffs going to be a thing. Probably. My point is that I think it's going to happen quicker than we think, and we don't have the team that can sit down across the negotiating table from a Trump and actually work out a deal that makes sense. They're too far. They're far too arrogant to do that. We'll see. Time will tell. But man, I sure don't have any confidence in it.
Well, it's funny because the general kind of feeling of going into the election compared to where we are today, and of course, Patrick, we're only getting kind of our side of it, if you will. I'm sure there's a whole other side we're not seeing. Mainstream media is pushing, or I guess we're going to call legacy media, is pushing a certain narrative that is certainly not gaining any traction. But it's not because they haven't tried.
Because oh my gosh, did they ever try to push that narrative hard?
I am very inspired, and I want to touch on this before we move on to the next topic. I'm inspired that I feel this is the beginning of a cultural shift, and I'll tell you what I mean by that specifically, Patrick. And I hope that this comes to Canada too. We both countries, Canada and the U.S., we're heading down this path where we're demonizing success, we're demonizing achievements. We are, people are actually scared to be successful nowadays, and people don't want to be successful, and people don't want to try and don't want to go above and beyond. And I find that a very, very dangerous place to be. And I kind of feel like some of that is coming back to the U.S. now. And I don't care if it's Trump at the helm of it. I certainly don't think the Democrats were doing a very good job of promoting that. I think they were promoting the opposite, which is why they certainly wouldn't have got my vote. But Trump or no Trump, the point is that is very important to the world, but it's also very important to us as their closest allies and their closest neighbors, that we want to push people to be successful. We want people to push themselves to be successful, and that we all rise up. And really, we were heading down the opposite path. And I'm curious to see if this is a change of culture. It feels like it to me right now, but we'll see. Time will tell.
I think this will drive it for sure. And there's going to be a lot more courage. People will start to stand up and step up a lot more, get more vocal. I'm already seeing it. Mainstream media doesn't have the impact it once did. Very few people, relatively speaking, are watching mainstream media anymore. They are going to YouTube. They are going to Twitter. They are going to BitChute or whatever it is. They're going to other platforms where they can get the uncensored version of what's happening. Let's face it, mainstream media or legacy media, whatever you want to refer to it as, they are scripted. They're reading all of the same scripts. You can't go from CBC to Global and get a different story. As a matter of fact, if you sometimes bring them together, it's literally the same script. It's all to say this: people are finally starting to see the shift or have a shift. And Canada's going to lag behind the U.S. I think the U.S. will lead the way in that kind of narrative, in the change of narrative. Canada has to get behind the entrepreneur, the small, medium enterprises. We need to get productive again. And I think that definitely the U.S. will lead the way in that regard. Our current government will and has proven to be those individuals that continue to drive bureaucracy, they continue to put layers of public sector in there, and we're just not being productive, and it's going to start to show up economically. I think you're going to see a polar opposite of that shift into the US. That is definitely, I'm hopeful, that will bleed into Canada, and we'll start to see that in order to drive an economy to get back to some form of prosperity that isn't just about consumerism and real estate, we are going to get small business activated again. That's what I'm hoping. But we've got a few years ahead of us. It's going to be uncomfortable, and it's probably going to be very frustrating as we go through the politics.
I think I'll tell you, I got a couple more questions on this, Patrick, and I just want to dive deep. I know a lot of people, I know that you're quite political. A lot of people have questions and want to know your thoughts. So I'm gonna push you on a couple different other questions here. But before we go there, what I find fascinating is he's only got 4 years. He doesn't have a second term. So I do agree with you that, albeit I think Canada is not necessarily high on his list of priorities. That he's got a lot of priorities that he's got to do, and they're all internally related mostly. But I do think he's going to come out swinging really hard, because I think he has a limited amount of time where essentially a huge percentage of the country is behind him right now. And he will only, at some point, just like every other presidency, their approval rating is really, really high. Then it starts to slow down, and then it drags over time. It's rare that most presidencies kind of get stronger over 4 years. They go through this kind of lull. He's going to come out swinging, I think, in the first, call it 6 months, call it 1 year. I don't know how long, but he's going to come out swinging, trying to do as much as he possibly can, because he's only got 4 years. After that, it's done. It's over. He's never getting back in again. So I think he's going to do as much as possible, and he's going to be concerned about, after that.
Yeah, well, don't be surprised if an Elon Musk comes up and all of a sudden he's a contender for being the next president. But that's a different conversation. Let me point out a couple things. Again, I want to go back to whether you like Trump or not. I think he surrounded himself with an A team. As I've really followed and watched his long interviews, whether it be with Rogan or Tucker Carlson, Dr. Phil, he's been on a lot of podcasts, and that's just to name 3 that come to the top of my mind. I've watched a lot. So I start to see Patrick Bet-David did a great interview with him. So I've really watched a lot, all of these guys. And I got to say that they show up way different. And when you get into that long format interview rather than the 4-minute sound bites or the 3-minute sound bites, you start to see who these individuals are. I want to point this out, though. I can't stress enough. Individuals aside, this is really a question of policy. And I think what the people said was, and because Trump was very vocal about it, they are voting for the policies that Trump is speaking of and talking about. As much as they're voting for Trump, they are in fact voting for a shift in policies. This is the fundamental difference that we have. I got to be honest, I'm a fan of Polyev, but Polyev is not a business guy. He doesn't have a background. He's not particularly business savvy, I don't think. So my concern is that, yes, we'll vote the player called Polyev because he talks common sense. He has all the right sound bites. He says all the right things. He pushes back against Trudeau a lot. Here's my concern. I don't know if he can pull off the policies, and has he really stepped up and started talking about policies? Some of it he has, and I'm excited about it, but then he has to be able to execute. That's my concern. The one thing we know about the A team that Trump's got, they execute. They pull shit off.
This is my question. So I'm gonna ask you the question. I'm gonna make a couple statements, and I'll come back to the question. But I want to get from you, Patrick. What do you think were because it was a close race there for a while, that's for sure. After the hot swap and so on and so forth. But I want to know what you think were the turning points and some of the kind of key critical things that Trump did do. Just because I think I think people could learn from this in general. So I'm going to come back to that question in a second, but start thinking about that. What I want to encourage people. And the thing that one of the turning points for me, and I think, and I want to put this out there because, the 16 people that are going to watch this episode, because I think we have 16 or 17 viewers now, which is great. Thank you, by the way, you 16, like Cody and Sandy. I know they're always watching. But my point is I encourage people to not get caught up in your past views and to be open to the possibility of changing your mind. And that's one of the biggest things that I think Trump did well this time, is if you were open to going to do your own research and not listening to legacy media, and you were open to listening to him on Rogan or on X or on somewhere else that's not legacy media, you got a completely different Trump. And and you can remove the word Trump from it. You got a completely different person there. And I think the new forms of media and these new forms of media that have only been around for 20, 30 years, they're not exactly new, but this long form podcast content, for example, where he was able to appear for 2, 3, 4 hours in some cases, was quite impactful. I think number one, it was a turning point for his campaign. But I think number two is I encourage people watching this that because when we come to our election, hopefully our candidates will do some long form content. And I encourage people to go outside of legacy media to get to know these people by listening to long form content like podcasts, YouTube videos, and so on and so forth. And I think that was a critical component to not only him changing a lot of people's minds, but also us seeing a different version of him.
100%. And let's face it, what he's done is he's bringing us back with some of his policies. Of course, he's changing what they're doing within their education system. He's changing what they're doing, like in terms of what they teach within the schools. He's taking the whole, I don't even know what the term is, this whole thing of sex change or transitioning or whatever the term is. He's taking that off the table for children under 18 years old and 16 years old. There's some protocols there that he's putting in place. Again, strong policies around our families, around our kids. He's talking about tariffs. He's wanting to bring productivity back into the U.S. He already said once, and I'm going to find the clip again, he said, the first day I'm president, I'm signing off on the pipeline. So we know that the pipeline at this point, he has said, is going to go forward. So that is something else that affects Canada. Where we're going to get beat up, perhaps, is in our steel as an example. They're going to have to negotiate well on that, and as well on our soft lumber. So we have to look at the business that we do with them. Those are just a couple of aspects. Canada has a chance to really lead the way in so many ways. Commodities aside, we can also lead the way in terms of our tech industry and grow our tech industry. This, again, is about, do we have the leadership to step up, sit across the negotiating table from the Trump team and actually pitch Canada for what we can do? Can we be good partners that supports each other economically and negotiate the deal? Trump's going to come in heavy-handed, and he doesn't trust Trudeau. He said that straight up. He actually talks about the time that they sat down, they did a deal. I don't remember what the deal was, doesn't matter. They shake hands on it, they walk away. He literally walks into his office where there's, or whatever office it was, where there's 15 screens, and there's Trudeau absolutely bashing the conversation that they just had. I mean, Trudeau's off the table for Trump. He has no respect for him. And I think we're going to pay we are 100% going to pay a price for that. We'll just see how much damage.
Well, hopefully he's not in there very long, Patrick. That's the only thing we can hope for at this point. But I will say this, because you're bringing up some interesting points, and there's a lot of people that are scared of this stuff. By the way, I'm hearing, it's funny because I'm hearing some people that are really creating a lot of fears. They're literally creating fears for themselves around a lot of this stuff. But it could go the other way, right? You've said it how many times, Patrick, that Canada is extremely rich in natural resources, extremely rich in a lot of resources, and we just got to do a better job at selling it. And if we can, and guess what? One of the largest consumers of these resources is just south of the border, and they need them all. So there's no reason we can't increase productivity, increase GDP, increase exports in a big, big way if we can get to that. So I think people, that is a possibility, assuming, of course, we need good representation and so on and so forth, but that is a possibility.
Well, 100%. We just don't have the leadership. That's the problem that we face, is that we don't have the leadership that can actually take us through that whole process. And people in general aren't understanding the fact that, they want government to save them, and they're using our tax dollars. They're spending it in a way that most don't want it spent. And they're increasing, again, that middle bureaucracy, that public sector, which is not
Do you think, though, this may be, I'm hoping, now this is JG's rose-colored glasses, but I'm hoping that south of the border, they end up reducing the government footprint in a big, big way with, Elon giving them a hand. And if they can do that, it will set a new precedent and a new standard, because the whole standard, it's not just us, buddy. It's not just the US. The entire government machine is going in that direction. And I'm hoping that we can now change that. and hopefully we can learn from our partners south of the border.
Musk has made it very clear. He's already said they're going to be letting a lot of their public sector go. They're going to pay them. They're going to give them 2 years notice, pay them for the next couple of years because they're going to have to go out and find jobs. They're not trying
Yeah.
to be harsh or cruel, but they're going, you got to go. There is no use for you anymore. Go find a real job, which
Yeah.
then will hopefully lead to productivity. So by taking this public sector, their public sector, pushing it out into the private sector, there's going to be more productivity. It's all part of a bigger picture. And so I think there's a fundamental around all of this, JG, that this may sound like, to your point, people are afraid. But this goes back to what we need to talk about, which is the real estate part of the world, or our conversation around real estate, where real estate is a store of value. We're actually investing in real estate for in some ways, a whole different reason. It used to be to create wealth, have a financial future, which still remains, but now it's almost like a case of survival. We need to get our capital placed in stores of value, real estate being one of them, because what's going to happen is the effect on the Canadian dollar and the US dollar and the actual breakdown, if you will, of fiat currency, which will happen over the course of several years. But at the end of the day, you need to get into real estate. This uncertainty, this confusion is where opportunity lives. Everybody wants to chase the shiny thing and the next hot thing. And we can see that in Bitcoin, for example. I'm a big Bitcoin fan, by the way, but it's also a statement of where people get into FOMO and they rush to this. Having said that, Bitcoin is a store of value. All to say that people are looking to put the capital, follow the money. And the money is going into real estate, it's going into Bitcoin, it's going into precious metals. Follow the money. And the opportunities exist for those who have the courage to look into what's going on economically and then take advantage of it.
The last, I agree, Patrick. We're going to talk Bitcoin. We're going to talk more real estate. The last thing I'll say on this is with regards to the election is I think another game changer, and I didn't get your moments where you thought they were essentially game changers or turning points for the Republicans. But I will say this, the concept of the way that he's built the team around him this time around was quite genius. And especially the people that rallied around him was pretty incredible. If you think about Bobby Kennedy, if you think about Elon, if you think about some of those people that Vivek is interesting, but Vivek was a nobody until he started running. I mean, you had never heard of Vivek. I mean, I understand he's done big things.
That's not true. That's not true.
I understand he's done big things. I get it, but to the general, he was a nobody. Now it turns out when he got into in the limelight, holy shit, he is a somebody. I get that. And I'm a big fan of Vivek. I think he's quite fascinating. His thought process is very interesting. But the way he's built that team around him, incredible. And I think that's going to be a game changer for politicians in the future and how they get elected.
So turning point was putting that A team together. And I forgot to even mention Kennedy. That is a huge turning point. It's like make America healthy again. And as you know, I'm pretty much a health fan. I do a lot of study of that. It's one of my higher values is health, because I think that not only as an individual, but as a country, we need to be healthy. And ultimately think about the healthcare costs. As much as we complain about healthcare, don't even get me started, because a lot of the healthcare and a lot of what we're putting in and what we have to do within the healthcare system is because people are not eating well. They're not looking after themselves well. So I don't want to go down that path. The point is this: that was a turning point for the Republicans when they brought Kennedy on, when they brought Musk on, when they brought Vivek in, when they started putting this team together. People could see this is real change. This isn't this isn't bringing a bunch of good buddies in and doing the politics game. This is, you need to shift policy around making America healthy again. Carte blanche, get done what you get done. And I forget who he put in place for the border control, but that guy is a piece of work. I don't remember his last name, but holy cow, I've listened to him. These guys are hard asses. They're not putting up with anything. And I love it. I think it's where we got to go.
It's interesting, and time will tell. Where this isn't the last time we talk about this, Patrick. It's only the first time, and it's going to get interesting. And the show continues. That's all I'll say.
Yeah, we got to carry on. Let's go. Let's keep moving on. That was a good topic, though.
Okay, port strikes. Let's talk about port strikes. What's happening with the port strikes, Patrick? I know it's not being covered on mainstream media, but you're concerned.
I'm hugely concerned. Number one, it's not being covered on mainstream media. Probably by the time people see the show, there'll be more of a conversation. I've certainly been tweeting about it and putting it out there and voicing my concerns and shining a light on it, whether it be LinkedIn or Twitter or X, I should say. But ultimately, we have these port strikes. Montreal, Vancouver, shut down. And what's really people don't understand is that I think is around between the ports is 800,000 a day, 800 million a day. So already we're into this for $5-6 billion of GDP that's going to come off the table because retailers aren't getting product. You are likely, there's a very good chance you're going to see some stores that are very thin on supplies, but that's also not to step over the fact that manufacturing they're ports. You got food coming in, yes, that's one aspect of it, but you've also got people manufacturing production of some sort, and so we're already crap at production. Now we're handcuffing the businesses that are productive. It's just goofy what's going on. But here's the thing: the port the strikers, thousands of strikers, people that have been locked out, by the way, as well. They're asked, the union is asking, I want to say they will bring their salaries into that 180 to 220,000 a year. And right now, the pushback is we got doctors that don't make that much money. So it could get pretty messy. And I think that seeing those shelves empty is going to have a ripple effect. So just to give you a context, in August, when rail shut down for 4 days, it took our August into negative GDP territory. So we're already upside down for November. We haven't even got the numbers yet, and we know we're going to be upside down. And if we're not, then we know those numbers are bullshit. So the point is, this is very, very costly. Why isn't it being talked about? This should be a big issue. And why isn't our government talking about it? They're still busy trash talking Trump and Polyev. The politics is nuts.
Do you think we're going to get an early election, though, Patrick? I hear rumblings that maybe it could happen. We can only hope. I know we can only hope, but
I'm hoping, and there's a fundamental here too, JG. As much as I get fired up about politics, don't make no mistake. I'm very, very clear that there's nothing I can do about it. I want to voice my concerns. I want to shine a light on it for our audience. You have to put a plan together. Whatever your thesis is around where this country is going economically, you have to put that thesis together, put a plan together, and then review the plan and then execute against the plan. In our world, real estate has to be a part of that plan. In the downturn that we're seeing in some parts of the country, in the world of real estate, this is where the opportunity lives. Okay. Your family in the world, get your money to work. You must.
Employment, unemployment, what's shaking there? I know there's quite a few, as you can see now, we're finally, I don't want to say what I like because I don't necessarily like this, but coming out of COVID, the entire country was just moving in one direction, which is like everything was, up and to the right kind of thing. It was like, but now and we talked about this several months ago, where now you're really starting to see the disparity between different provinces. Some provinces doing better than others. There's no doubt about it. And even within that provinces, we have to remind people, Patrick, real estate is regional. We're not saying real estate is provincial because it's not. It's regional within the province, but there's no such thing as a Canadian real estate market. There's no such thing as an Ontario real estate market. You have to go within the actual municipalities and even sometimes dig a little deeper than that, especially if you're in the GTA, which is a massive part. But Patrick, connect that to unemployment, and then let's talk employment. I know you got a couple great charts here.
Yeah, a couple of, I got thinking about it as I was putting this all together. When we look at, one of my frustrations is, do we trust the unemployment numbers? Do we trust the data we're getting? That's one aspect of it. And primarily it's lagging. So I want to know what's going on in a more current form, if you will. So then I look at unemployment versus employment, how many people of the workforce are going for, and how many of the workforce are actually working. And those numbers are a little bit, they're tough to read. They're tough to understand, So we start to see that our employment is down a little bit, our unemployment is up a little bit. But then I said, well, one of the things that I want to do in terms of comparison, how do we look at the employment number and see what we think of it? What does it mean to us? And so when we start to see that employment coming down and unemployment rising up, we start to see a differential that we need to pay attention to. And what I did was I said, well, what's the ratio of employment to unemployment? So I started looking at that particular ratio, and we start to see that as much as unemployment is ticking up, and by the way, JG, you and I have had these conversations many times. I still think that 6.5% unemployment is still a healthy number. It's not a big concern. It is a flag. So if we start to go above that, we start to go, okay, things are a little bit of a concern. But the ratio really shines the light on the fact that, yes, the ratio between employment and unemployment has shifted, and it's not as strong as it could be and that we'd like it to be, but it's not off the charts bad. Having said that, we are in fact starting to see where it is ticking up, and we got to pay attention to it. And so we go back to Alberta, where we saw, I think, 7.5% or whatever that number was. It was over 7% of unemployment. The reality of it is, in Alberta's case, so many people moving into that province. It is the inevitable, or the illustration, metaphorically, filling the glass with water. You fill it and then it gets full, but you keep pouring water into it. Well, it's going to come out the sides. That's what's happening in Alberta. There's just not enough jobs to accommodate the sheer volume of people that are moving into Alberta. And they're moving into Alberta because of affordability more than they are even jobs. So if you're going to be unemployed in somewhere in the country, I think it's better to be unemployed in Alberta than Ontario or BC, just from a cost of living point of view. And I think we need to look at the next chart, or one of the charts that we have on affordability. So that's the point of around the employment unemployment ratio. Gives us another view of what that means to us and what's happening economically.
Interesting from a business owner's perspective, Patrick, and I know you always look at it from this perspective as well, having owned many businesses, and you still do. But like you said, 6.5% for hiring. This is a great time to be hiring, and we're finding great people. There's lots of flexibility there. It's absolutely fantastic. I mean, if we could stay right here, this would be fine by me from a business owner perspective. And I'm certainly not seeing. I mean, we have, we got 200 and some odd plus doors, and I haven't heard a single, there's nobody that's having a hard time. Not in my market. Now other people are in different markets, but the market we rent to, I'm not seeing any particular job loss. I'm not seeing anybody struggling to find work. I'm not seeing any delinquencies because of that. We also have a commercial portfolio we own and we manage, and I'm seeing much more business turnover there, where businesses start, try for a year or two, don't make it, but that's pretty normal. I mean, within 5 years, 95% of businesses don't fail, or do fail, I should say. So anyways, that's kind of my feet on the street view of what we're seeing here. But I'm not renting to the lower portion of them. They might be more at risk of unemployment.
Well, we know that right now we're going to see an uptick in construction. That's the lag that's coming through. So construction jobs, at the end of the day, when we look at what's going on in Toronto, when we look at Ontario overall, and Vancouver, Alberta's the only exception to it. Nobody's building that detached world, right? That semi-detached and detached world. There's very few buildings going up. Toronto's shut down in the condo market for now. The math doesn't work. They can't make it work, so they're just shut down. Anything coming online in the condo market is been online for already 3 or 4 years, so they're coming to fruition in that. But that condo market skews a lot of the data that we're getting. Having said all of that, what we're going to see the tick up is, in fact, the construction jobs are going to start to get far softer. We'll see unemployment in that sector tick up. I have no doubt about that.
Do we have data? Do we have data on that, Patrick? Because I have a bit of a let me take the other side of that argument for a second, which is for so long, and I'm going to speak specifically to Ontario right now. For such a long time, it was so difficult to get trades, and there was such a trade shortage that, number one, it held back productivity. There's no doubt about it. My point is that as the specifically Toronto condo market backs off, I know what's happening because I'm seeing it in my markets. Those people are starting to come outside of the Toronto area to work. They're not doing the condo buildings anymore. They're now coming out and they're working on single family homes in Markham or in Peterborough or wherever the case may be. And by the way, there's a ton of building going on in the markets that I represent. We are seeing the Toronto trade companies come and bid on those jobs. That never happened before. Okay. First of all, that never happened before. So what I'm saying is we had such a backlog of people needing tradespeople. What I'm seeing is actually that the market is absorbing the surplus from Toronto. They're not going to go on unemployment. They're just going to go into the other markets. And yes, they're going to get paid a little less. And yes, they're going to drive a little further, but they're making it work. And I'm seeing more of that than I am unemployment in the construction sector right now. And jobs are getting done. Projects that typically you'd have to wait, 8 weeks to get an electrician, boom, you can get an electrician in 2 weeks. Like, it's back to normal, not mass unemployment. That's my argument to this concept.
Yeah, I think I'm not disagreeing with you, but I think the absorption isn't going to be enough. So you're making a really good point, and I don't want to step over it because absorption is a big issue. I just don't think that you're going to, when you look at the volume of construction that it takes to build these buildings and do what they were doing leading up to this point, you're just going to have a lot more jobs. It's going to be a little bit like Alberta, where you're going to be pouring a lot of these people into other sectors or into other regions, but the absorption is not going to be there. So we'll see an uptake. I don't have data right now to support that kind of view of the world, but I do have it somewhere, and we are seeing it tick up. Again, this is all part of, the other side of this coin is then you look at the port strike. And I want to say is that port strike, if it continues, you're going to see more inflation. You're going to see a shortage of goods. Toilet paper is going to go up. I mean, all the things that are happening. So I joke about that.
Are we going to start hoarding toilet paper like last time? Is that what's going to happen?
Well, I think that's probably one of the reasons that mainstream media isn't talking about it. I think there's let's not put this out there or we're going to have a run on stores. I don't know, but that would be one reason that they don't do it. So the point is we're going to see some inflation. The unemployment ticking up, or the employment ratio not getting out of control. In other words, we're still a little bit soft, will really support the cost of salaries being worked into the things that we're doing. So wage growth won't go up. Now, on the other side of that, we got a whole issue because people, if their wages don't increase, the affordability of a home becomes, insurmountable. And that's what we're bumping up against.
But could you pay me in advance?
Again, I go back as investors, for those of us who can raise capital and see the way to invest in real estate, we become the rental housing providers, and that demand will continue. Although rents are softening right now, JG, you know that. We're starting to see a softening of rents. It's not like the bottom's falling out of the rental market.
Let's definitely talk about rents because I've seen that. I did a rental market update, a couple of weeks ago, and that's exactly what we saw. And by the way, we saw that essentially like late part of September into the late part of October. It has rebounded in my markets. It has rebounded a little bit. Definitely, there was a bit of a lull there for about 6 weeks where we had to bring prices down by $50, $60, $70, sometimes $100. And I do want, for investors listening to this, though, keep in mind, you're starting from a very, very, very high bar here. And that was the point of my rental market update, Patrick, because I was telling investors, like, let's not freak out here. Yes, we've hit the ceiling of limitation on rents, but let's not freak out and let's not, throw the baby out with the bathwater. Just because rent's got to come back down $50, $100 and take a temporary breather, even if if they stayed there for another year or 2 years, it's still a very, very high bar, and you can still do really, really, really well in real estate. But people see that the rents are falling and they freak out. That's not the reality of how these numbers, actually play out. But you are 100% right. And I got to say, Patrick, when I put up this chart here on the screen, I was pleasantly surprised that actually the data I'm seeing feet on the street matches really, really closely to that data being published, which is not always the case, if you know what I mean.
I do. So the point is that we need to carry on. something that we didn't bring up at the start of the show that I think we have to touch on is just, interest rates, and what is the impact of the next, December interest rate announcement. Right now, everybody's calling for a 50 basis points, and I think that's going to be the case. This again is an indicator. As much as we as real estate investors look forward to the rate coming down, the bond yield, the 5-year bond, will continue to tick up. I don't see fixed rates coming down right now. If you are renewing mortgages or getting a new mortgage, the variable rate is the way to go. We'll see it come down some more. And then we got to keep a really close eye on what's happening with 5-year bonds, so that we can decide, okay, are we going to stay with variable, or are we going to take advantage? And if we see the fixed rate come down a bit, we may want to lock in. I think that over the next couple of years, we're going to see inflation continue. And I'm have some concerns about the inflation factor. Again, we go back to inflation. Make sure that you're investing in hard assets, real assets called real estate, stores of value. Get that capital to work.
Now, Patrick, let's touch on that. I saw the 5-year bond yields because it was starting to climb again. Boom, Trump gets in office, and then it takes a bit of a dive. We'll see if it continues that way, because it was back on the path. It was like 3.8. And I'm ballparking here, but it was like 3.8 12 months ago, 14 months ago. Then it went down all the way to 2.7, 2.6 something. Then it started climbing back up, and we were back up to 3.1. And now we're around the 3. We're dipping just below 3. Interesting. Where do you think the bond yields go from here? Do you have a thought in terms of where you think they go from here? Because one of my concerns, and I'll just echo this, and man, I don't even want to put this out into the universe, but I got to say it out loud, which is I'm concerned that the market heats up, as it has been since last Thursday. The market is on an absolute ripper. The Bitcoin market, the stock market, every market is ripping right now. I'm concerned that the Bank of Canada is going to see that as a temporary good news and not cut the rate in December. That's my concern, is they're going to say, hey, this Trump thing might actually just blow up the market. Let's not cut, and let's pause and wait for another cut in the new year. I'm curious to see if that's in their thought process. Who the hell knows? But
I'd be surprised. I'd be very surprised if they do that. We have to look at the economic data, that we as a country are facing. And Tiff Macklem is going to make the dollar the sacrificial lamb. Don't be surprised if we at one point see a low 60-cent dollar. I wouldn't be, I wouldn't be surprised if that happens. I mean, you look at what's happening to the Canadian dollar against US right now. Tiff Macklem will have to look at what's going on economically. We have to face the reality that our economy is softening, and it's actually softening quite quickly. So it continues to. Now, when I say quickly, it's not next week, but over the course of the next year, as we go into 2025, it could get really uncomfortable. So he's going to have to lower that variable rate. He needs to get the banks lending again. He's got to get businesses borrowing again. And he's got to get people back into the real estate market. As many as we're seeing listings spike all of a sudden. Oh, guess what? There's no supply issue. Lots of stuff is on the market, but nobody's buying. And as much as we say, well, they're waiting for interest rates to come down, and that could be part of it, there's also a lot of uncertainty into, am I going to have a job? What is going on economically? What will the impact of Trump and the US election have on our economy? People have lots of fear and uncertainty around that, as you know, JG. And so people are sitting and continue to sit on the sidelines, and that is slowing down the economy even more. Consumers aren't consuming. That's a problem for Canada, given that is a big part of what drives our market.
Yeah, interesting point, Patrick. Interesting point. Now let's talk. It wouldn't be a show if I didn't give Mr. Alberta the chance to talk Alberta. So before we run out of time, we should definitely talk about Alberta. I can tell you right now, one of my operations manager for Visture, who is bi-provincial like you, Patrick. He was just in Alberta for the last week, and he's like, it is just booming in terms of the building and the construction. He was pretty taken aback by it. And keep in mind, he works in a construction business, and Visture's construction business has more than doubled in the last 6 months. So we're booming at Visture. I can't say everybody's booming. We're booming, but he's seeing it firsthand right there in Alberta. There's no doubt about that.
Yeah, I think he's primarily looking at what's going on in Edmonton. Calgary's
Correct.
definitely starting to slow down, and definitely starting to slow down. But I'm going to put the flag up, a flag of caution for everybody. Is I've seen these cycles in Alberta before. We have to pay attention because they are building. They don't have the same restrictions, same zoning challenges, the same tax challenges that BC and Ontario have. So when we start to talk, and you talk about your guy going to Edmonton/Alberta and seeing the booming market, this is a risk of overbuilding, oversupply. It's happened in Alberta before. We have to watch those numbers closely. As I've said as clearly as I can many times, if you're investing, stay the hell out of the condo market in Alberta. Full stop. That's it. If you're going to live there, go crazy.
It's interesting, Patrick, because Alberta, I would say, so this overbuilding scenario, and a lot of Canadian investors don't realize this but if you study the US market, overbuilding is a real issue in the US because these guys build and they build fast. I mean, they build like 10 times faster than Canada. And when they build up a subdivision, let me tell you, they put up thousands and tens of thousands of homes, lickety split, and they flood the market. And I've seen this as I studied the US market. There's a lot of swings in the US market because of this, where prices are really up, then supply hits the market, prices come down dramatically, especially if you're an Ontario investor. And as you point out, a BC investor, this isn't really a problem here because it's so difficult to get projects through that by the time they get through, it's already been absorbed and it's all good. But you're right, Alberta is a lot more like the US, where things are much more fast and furious out there. And it's a bit of a concern. I think it's a real heads up play for an investor to really be considering, albeit, I will say, look at this chart on population, Patrick. I mean, during the boom years of Alberta, and the boom years, I mean, you've seen many boom years because you're a boomer and you've been around a long time. But in the boom years that I remember, at least for Alberta, look, the population growth was like 100,000. And now they've doubled that. And it was booming back then. And they're now double that and they're sustaining it. That's quite a bit here. This is a lot. This is what's driving everything, in my opinion.
Well, it is. And of course, what we start to see, and this is why it's so important for Alberta when we look at what's going on in the oil and gas industry. It's important for Canada, by the way, but Alberta is certainly the leader in that bus, or leader in driving that bus. I want to point out something, and we got to get to the charts of affordability. Just for context, affordability, anything over 40% is, of household income is considered quite expensive. Of course, you get into Ontario and Toronto, it's, probably averages close to 60% of household income. Vancouver specifically at some point is like 93% of household income to afford to buy a detached single family home. It's really crazy in terms of affordability. So average income in Vancouver, you need to be making almost $250,000 to qualify for a mortgage for a single family property in Vancouver. In Ontario, and I know these are just averages, but it's well over 200,000.
It's more than that. It's over 250. The charts here on the screen, it's over 250 for Vancouver, Patrick, and it's like 180 for Toronto and it's like 220 for Toronto, and even Victoria, BC is over 200 now.
Yes.
The only people who can buy there are the people who work at the ports that want 220 grand.
It's true. But then look at what it is in Alberta. Look at what it is in these Alberta cities. Calgary, which is just complaining about how ridiculously expensive it is in Calgary. What is it? $117,000. Half the amount, less than half the amount to buy a home in Calgary versus Vancouver, almost half the amount versus Toronto. And then you start to look at Edmonton. And I used Fort McMurray as an example in this particular chart because there was a time where Fort McMurray was, close to or over $100,000 in its heyday. But this, JG, you'll love this because you're a technology guy. Part of what has happened in Fort McMurray, aside from the floods, aside from the fires, what's happened is the oil and gas industry, we'll call it when you look at Suncor as one example, the technology has shifted and they've gotten so much more efficient with technology. They don't need the labor force that they once had. So as much as we think that whole industry has slowed down, it hasn't slowed down as much as the technology has taken over. Whatever the numbers were, and I'm sure there's some oil and gas guys listening, let's say it had 15 guys to run a rig on any given day. Well, now they do that with 3 guys, in a Calgary office remotely. Like, it's almost that extreme in terms of the labor required to process what they've been processing in the oil and gas industry. So, all to say this: Albertans complain about the cost of living, but I joke all the time when I go
Albertans, stop and moaning. That's the bottom line.
when I go to Calgary and Edmonton from British Columbia, which I do often because I'm bi-provincial in that way, I literally think I'm going to a factory outlet. That's what it feels like. JG, you and I went shopping last time we were in
went
Calgary.
shopping.
You got to admit,
Yes. Buddy, I
You
came
loaded
home
up.
with an extra suitcase full of clothes because it was on sale. I mean, like, life was on sale in Alberta. That's the bottom line.
perspective, isn't it?
Isn't it? Now, listen, though, you brought up a good point, and I know we got 1,000 things to get through here, and I think we're doing a good job getting through it. But Ford McMurray, you're bringing up a good point, Patrick, which is people look at technology as this thing. It's like, well, I'm in the real estate business. Technology's over there. Real estate's over here. No. That's not how it works. Some technologies impact real estate, like this one in this example, Patrick, where if you bought into Fort McMurray at the top, and this technology, like if you got into Fort McMurray, when was the top of Fort McMurray, would you say, like 14, 15, 16, maybe?
Yeah, 7, 16, 15, 16, somewhere in there. I've lost, my memory is not good. I was, as much as I was never focused on real estate in Fort Mac per se, but yeah, it would have been about 15, 16.
I mean, somebody could put it in the comments, but the point is that, Fort McMurray had a top, and it is significantly off that top. Now they've struggled with wildfires, and man, there's been a ton of shit going on over there. But the point remains, Patrick, that technology does have an impact on real estate. We did a whole conference around this years ago. And in fact, I was reflecting on that conference we did, Patrick. We should do like a post-mortem on that conference, because a lot of the stuff we talked about then is happening now. We talked about autonomous vehicles. We talked about autonomous flying vehicles like, robo-taxis, and then eVTOLs. We talked about that. That's all kind of happening right now. And we did this 2-3 years ago. And, for some, it was pie in the sky. But here we are today, 2024, heading into 2025, and it's getting real.
Well, and I want to shine a light on something as well to that point, JG. When you look at Fort McMurray, we often talk about what drives the future of real estate is population growth. And in Fort McMurray, given what's gone on, again, major fires, major floods, plus technology, all of a sudden, there isn't the demand for labor and workers, so there isn't as many people moving to Fort McMurray. There was a time where, they used to, Fort McMurray was like remote Nova Scotia because they had so many people that they were flying in literally for labor from the East Coast. So the point of all of this is that when we look at what's happened in Fort McMurray, the demand isn't there. And so what's happened is that the cost of living has come down. Housing has gotten very soft because the demand isn't there. Population growth isn't there. So I just want to shine a light on that as a reminder to people that we have to stay focused on this population growth part of it, GDP growth. And, Fort McMurray is a good example.
Now, Patrick, if you're a nerd like us and you're nerding out on all the stats and all the banking stats and all the various things, delinquency is one of the things that people are concerned about, because 2025, a huge percentage of mortgages are going to renew in Canada. And as a result, they're expecting a delinquency spike, which is, a big reason why I think the Bank of Canada is getting ahead of it and lowering rates in a pretty dramatic way. Hopefully they continue that. But here's an interesting chart of what's been happening with delinquencies, and where do you see it going from here, Patrick?
I think we'll start to, we'll continue to see it tick up slightly. But remember, one fundamental thing is that Canadians have historically will figure out how to make their mortgage payments. They'll give up credit card payments, they'll give up car payments and boat payments, and they'll go south on a lot of deals. But when it comes to their home, over, a roof over their head and that mortgage payment, they generally will do everything they can to figure it out. Now, that's not to say everybody's in that situation or will create that situation, but most will. So it's only to say this, is that as we see delinquency tick up even a little bit, it is an indication of what's going on economically, because historically We fight for our homes. We figure out how to make those mortgage payments. We take roommates. We beg, we borrow, we steal, we do whatever we can to make sure that they don't foreclose on the house. That's the fundamental. So if it ticks up even a little, those are flags that we have to pay attention to of what's happening economically.
Same with this chart, Patrick, powers of sale. And you can see here, definitely an elevation that really, well, it's been ongoing for a while, but definitely an elevation here that continues to go in the wrong direction, if you will.
Yeah, and this is a chart specifically of the condo market. So no surprise there. It's going to continue to go up. People are upside down. Again, they didn't have an exit strategy. They didn't have a plan, and now they've got a situation that they can't execute on anything. And so things are going to get worse before they get better. There's already talk of individuals who have capital that are going into that Toronto market, and they're getting some pretty great deals. If you've got, listen, here's the fundamental. And Phil Soper actually was, did a article in the Globe, I think it was. He talks about, he sees 2025 as being a resurgence of real estate in the Toronto market. I'm not that optimistic. I mean, Phil Soper is CEO of Royal LePage, so he's got to paint that optimistic picture. But I think that and he's got a fairly strong argument for why it could happen. I just think he's a little bit early. I think we're going to go through a lot more pain before we get to a place where we start to see that market gain strength again. Having said that, if you've got capital and you can want to park it and you want to just put it in play, which many people with people with deep pockets are in fact doing, they're buying great deals in Toronto and they're just going to sit there. And if it sits there for 10 years, they don't care. They're putting their capital to work because they know what is happening economically and they know real estate is that store of value.
Yeah, it ain't going to take 10 years. I can tell you that, Patrick. But you bring up an interesting point that, a lot of real estate investors, they wait to get their cues. And that's why I hope people appreciate this show. But because that's what we're trying to bring to you is different numbers, statistics, research, data that you won't get anywhere else. But Patrick, what the average investor is sitting there and they're waiting to see something out there tell them it's time to buy. And I just want to point out that by the time it gets out there and by the time you read it in the Globe and Mail or anywhere, by the time you read it anywhere, you've missed it. I'm not saying it's too late, but you've missed the bottom. And I've been talking about this for some time, Patrick, is there is a period of time where it is towards the bottom. Are you at the perfect bottom? Probably not, but it's impossible to time the perfect bottom. If you're trying to time the bottom, you're playing the wrong game, in my opinion. But the point is a lot of people are looking for cues outside of their own research and saying, once I read it here, I will, then I'll get in. And I think that's, I think right now is a perfect example of how the contrarian investors, the investors that say, listen, now it's time for me to do my own research and build my own narrative and make moves for myself, even in the face against what the narrative is out there. I think those investors are going to find themselves to be highly, highly rewarded in the future. But it takes courage. It takes cojones. There's no doubt about that, Patrick.
Well, hey, listen, we see the trend. I'm going to give an example. So in a couple of weeks ago in Edmonton, Alfonso Quatra with Wealth Genius and I, we did an intensive weekend. So we were talking about multifamily investing, U.S. investing, land development. And I mean, it was just so great. It was a great weekend. Here's the fundamental difference though, JG, and we've seen this time and again. There's 140 people in the room. Normally that would have been 440 people or 640 people. What happens is people get caught in the emotion and everybody rushes into the real estate world. But at a time when it takes a little courage, it takes a little thought, and it's a little frightening because of what people are hearing in the headlines, everybody sits and goes away. So it's just interesting. We see the market sentiment. And for those who are a little more courageous, willing to put themselves in the right environment, surround yourself with like-minded people. It's why we keep pushing the RAIN community. Then you will, in fact, have the confidence to move forward, to build your real estate portfolio. That's all I got to say about that. And this particular weekend, we're in Langley, and Alfonso and I are doing that event again in Langley. So, multifamily and land development and US investing. Now, by the time people are watching this, we're into the weekend, so too late to register. But anyways, I just wanted to share that.
Come next time.
Come next time.
All right, Patrick, just to round out the show here, one of the things we did a couple years ago, we had this technology conference, and it worked out really well. You and I were on stage. We hosted this conference. We had some incredible speakers. We did some great segments. We talked about the future of real estate and how technology was going to impact that future. And one of the things we talked about was cryptocurrency, specifically Bitcoin, and we talked about it in depth. And I remember, Patrick, like it was yesterday. This was probably like 2.5, 3 years ago. I think 3 years ago, maybe even 3.5 years ago. But I remember a lot of people coming to me and saying like, JG, I never really heard of Bitcoin. I never really understood cryptocurrency. And that conference was their introduction to the space. Now look at what's happening, Patrick. Bitcoin is on an absolute tear. And it'll be interesting to see where it goes. But here's a chart of where it's head just year to date, Patrick, and it's been pretty wild.
Yeah, so we talked a lot about Bitcoin over the years, and it is one of those things that anybody who would listen, I said, if you don't want to get into Bitcoin in a big way, that's fine. Open up an account, put $100 in there, $50, a couple $100, and get familiar with it. The point about Bitcoin, whether you agree with it or disagree with it, it is a statement of what's going on economically. So when we look at Bitcoin and all of the things that are happening, again, it's a big topic, but ultimately what we're seeing is that now that Trump became president, we know he's a Bitcoin fan. We know that he believes in the Bitcoin as a cryptocurrency. We don't call Bitcoin a cryptocurrency. We talk about Bitcoin and then other cryptocurrencies. He is a fan of Bitcoin. He believes in it. Michael Saylor led the way in that in terms of what he did with MicroStrategies. On and on it goes. The point is this. It's a statement of what people are doing. They're looking for stores of value, hard, real assets. Bitcoin is now considered that. So like real estate, like gold, and gold is also on a spike. And the point is that Bitcoin is another store of value, because when we look at what's going on economically, when we look at the devaluation of our currency, these are stores of value. So again, it's almost, given what's going on in the global macro, it's a must. We're investing for different reasons. And one is a hedge against the inflation and a hedge against the devaluation of the dollar. We can get all complicated with that. But the point is this: we need to put our money to work. JG, you know this and I know this, is if you have 100 grand sitting in your bank account today, by the end of 2025, if you put that money in the bank today, you would have the buying power of about $85,000. So are you okay to have that melting ice cube called your dollar sitting and melting? You got to get it to work. And Bitcoin is one of those opportunities that many have been taking advantage of.
That's actually a really good metaphor for what inflation does to cash sitting in the bank that isn't earning a return, Patrick. That's a really great metaphor. And I love the fact that, and I think we should go back, Patrick, because a lot of the stuff we talked about at that conference is really starting to hit its stride now. And you're going to start to see that effects on real estate. We had some pretty bold predictions. I remember when we did that conference, people were like, wow, this is pretty bold. But we had some bold predictions around where we thought this would help the real estate market and how it would help shape the future real estate market. So people should go back. That must be on YouTube, right, Patrick? If they search around, they'll probably be able to find that conference. I think we put it up on YouTube.
I don't know. I'll have to look around.
That's great.
Okay, JG, we covered a lot of ground. Hopefully you have seen this as valuable. Get your money to work. Pay attention to what's going on economically. Follow along, like, subscribe. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.